Welcome to the Mortgage Weekly Market Update for the week of March 3rd, 2019. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week we saw mortgage rates move higher. If you take a look at the bond chart on the screen, you can see mortgage bonds, the short-term trend is for bonds to sell off. They broke through the 25-day moving average, then broke through the 50-day moving average, and then also broke through another floor of support at Fibonacci trading technical signal at 101.85. So that is all bad news. Mortgage bonds having a tough time trying to find a floor of support. So after finding the best rates we've seen in a year, mortgage bonds are now moving higher, broke through some floors of support. So we're going to recommend locking in your mortgage rate to start the week until mortgage bonds can find a solid floor of support. So go ahead, lock in your rate, take advantage of whatever rate you got, because it could get worse before it gets better. Now, if we dig into the economic news, the U.S. stock market is surging higher. Stocks have had a very good week last week as stocks were anticipating a deal with China on trade talks. The Dow closed the week at 26,026.32. This is not too far from the highest closing ever for the Dow at 26,828.39, set in October 2nd, 2019. So again, when money moves into stocks, it moves out of bonds. That is what hurt mortgage rates, because as the stock market rallies back, bond market suffers. We see mortgage rates move higher. Now, then we saw gross domestic product for the final reading for the fourth quarter of 2018. Showed the U.S. economy grew at 2.6% in the fourth quarter, stronger than expectations of 1.8%. And the full year gross domestic product for 2018 was 3.1%. So a very good showing for 2018. We'll have to see if that continues as we move into 2019. The trade talks have been hurting the GDP as we've been in a trade war. So if we can work out the trade war, that would be good news for the GDP, good news for the economy. So we'll have to see if that works out. Then we saw the personal consumption expenditure, the PCE, for December 2018. That is the Fed's favorite measure of consumer inflation. The PCE fell from 1.9 to 1.7% on a year-over-year basis for the headline number. Then they also tracked a core number, which stayed the same at 1.9%. The core strips out food and energy to give us a reading on that. So headline dropped from 1.9 to 1.7. The core stayed the same at 1.9. So great reading on inflation. That's bond-friendly news, so mortgage rates do normally like that, but the stock market overshadowed the PCE last week. That's why we did see rates move higher. Then we saw weekly initial jobless claims come out on Thursday. Claims did jump higher by 8,000 to 225,000 claims for the week. Still a good solid claims number, well below 300,000, which is a danger mark. And the previous week of 217 is actually the sample week to be used in the jobs report for February, which comes out this Friday. So that alone points to a very good jobs report, but there's other factors that come into play. We can't just solely predict it off the weekly initial jobless claims. Now, if we jump over to housing news, a new construction, got a couple reports there. New housing starts for December 2018 were down 11.2% to 1.078 million units. This was worse than expectation of only a 1.3% drop. So housing starts measure the number of new homes that builders start constructing. Then we saw building permits for December 2018 were up 0.3% to 1.326 million units. This was much stronger than anticipated. So building permits is a sign of future home construction. So this leads us to believe new home construction might start doing better in the future, as we saw building permits were up. Then we saw a report on pending home sales for January 2019. They were actually up 4.6% on the index to 103.2 for December. This was much better than expectations of 0.8. Pending home sales are down 2.3% year over year, which is big improvement from last month. They were down 10% year over year. So big rebound in pending home sales. Hopefully that moves into the spring market, and we're looking for a very strong spring market. Then we saw the Federal Housing Finance Agency, or FHFA for short, released their home price index for December 2018. It showed home prices rose on average 0.3% across the country from last month, and the year-over-year price appreciation dropped from 5.8 to 5.6%. So that's still a solid home price appreciation number. We're looking for a very strong spring market. So if you're looking to buy or sell a home, great time to do that. Now, in the local news, we got the next first-time homebuyer seminar in Newark, Delaware at the Christiana Hilton Hotel on Saturday, March 16th from 10 a.m. to noon. And then we're back in Wilmington on Wednesday, March 20th from 6 p.m. to 8 p.m. at the Independence Mall EXP Realty office. You can register for either one of those events. We give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. And then in Maryland, we are in Hyattsville on Saturday, March 30th from 10 a.m. to noon. You can register for that one by giving us a call at 410-412-3319 or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.